Alright, welcome. I've gotten a lot of questions on my indicator that I designed for Thinkorswim. I based the idea off of Student Lone Ranger's blog site. He's been developing mathematically the same indicator. I'm sure his code is not exactly the same. I took his idea and developed my own. And Student Lone Ranger has a lot of good articles. You should go check out his blog site. But his basic idea was he was getting hammered using an automated trading system during periods of chop. Basically, this period right here is a good example of chop. The market is not really trending quickly in one direction or the other. So he needed a way to identify this chop mathematically, and he came up with this oscillator. He's using the oscillator, or he intends to use the oscillator, to turn off his system for trading, whatever it is. If it's moving crossover average or a MACD, when it's in between that chop area, he's not going to trade that system. But I found through some research that you can actually use this to trade the market. You can use it as an indicator of when to entry and exit, and I'm going to explain that to you. Basically, the indicator takes the linear regression over 10 bars. It's actually mathematically it turns out to be 9, and plots that. And what the indicator does is it takes the angle of ascension or descension and graphically represents that at the bottom of your screen. Now, this really only works for something that trends, generally trends, throughout the course of its trading history. If you use it on a stock, it's going to be real small, really small trends. You've got to adapt your oscillator to whatever security you're looking at. For example, here I have the ES, and this is November 11th and 12th, 2011. So we've got this general broad uptrend right here, and what it does is you set in the limits for its trend above and trend below lines. This would be right here is the trend below. This is the trend above. For this purposes of this study, I picked 25 and negative 25. And what that means mathematically is 25 degrees of uptrend or 25 degrees of downtrend. Anything in between 25 degrees, I have told the oscillator that is a period I don't want to trade in. So if you take a look at it, our first cross is right here. It actually crosses the line here, but we wait 1 bar for it to confirm that it's still continuing down. So if we sold short here, we would have bought back here. So we would have maintained a small profit, right? And now I'm in that area where the trend is changing right here from 25 or negative 25 to 25, right? So we've shifted gears here. Now we're headed up in the short term. All right, we cross above on this bar, so we would have bought here, right? So we kind of chop around a little bit, and the indicator starts to realize that we're chopping, and the angle starts to decrease. And as the angle decreases, we jump out, right? We would jump out on the open of this bar right here, which is down here. So we would have got stopped out for probably a loss, honestly, if you have good trading technique right here. You would have got stopped out. But that's neither here nor there. No oscillator is 100% perfect. So anyway, market continues, right? The angle changes its mind, comes back up, just comes over that line right there that I defined, right? And the next bar is headed down. So, you know, this is where discretion comes in. You can trade this. You don't have to trade this line right here. It's not right now. The angle here is decently flat. It's not a great, nice, smooth curve up or down like it is here. So that's totally discretionary, right? We move back down into the area, come below, which initiates that it is a steep downtrend. So you could jump in here or here if you so desired, right? But once again, we probably would get stopped out for close to a loss, or we would get out right here, right? So you would have entered here, excuse me, right? Either this bar or this bar, depending how aggressive you are, right? At the open of either one of these bars. So call it 1243 even, and you would exit on the open of this bar, 1242. Spot, we'll call it spot 25. That's the open. So you would have gotten a small gain out of that one, right? So anyway, we got this nice uptrend here, right? We would have caught a good portion of this. We would have bought, depending on how aggressive you want to be, this bar or this bar. For the sake of argument, we'll use this bar. So we would have opened at 48 spot 25, and we would have got out roughly here. Once again, depending on how aggressive you are, we'll pick the worst of the position just for sake of argument. We open up here, we would have got out at 58 spot 75, right? It's a pretty nice little gain there. And what happens is if you see the trend, it's spiking upward. Now it levels off, right? And the indicator says it's leveling off. So now we want to be out of it. We don't want to slope downward, and we don't want to trade an oscillator when it's whipsawing back and forth. It's going to eat you in commission costs. So finally, see this area right here? We're just kind of drifting in that area, right? And then we hit it. We hit a trend. Starts to come up. Starts to come up. Now, depending on how aggressive you are, open up this bar, open up this bar. Either one, right? Trend continues, and then we dive down below, right? So once again, depending on how aggressive you are, this bar or this bar, probably not a very good gain, right? Now we're kind of back in that area. Right here is a discretionary trade area, right on down to this line right here. Right here is steep enough, right? Look at this price action. So once again, depending on how aggressive you are, either this bar or this bar, we're getting in, right? So let's say we get in on this bar, right? We go short. Opens at 60.75. And once again, depending on how aggressive you are, you either close here or here, or 58, 50. Sorry, hold on. I had to find my spot on my screen here. 55.25. So that's the general premise of the indicator. I hope that helps clear it up for people. If you got any further questions, shoot them over to the forum. I'll be more than happy to answer them for you. You can go with Student Loan Ranger's approach. Is totally valid. Use it as a way to decide when you want to start getting in and out of the market. If this thing's bouncing all around, odds are you're definitely working out well. Something I forgot to mention at the beginning of the chart, or the beginning of the presentation. I'm using a 15-minute chart of the ES. When you change your chart, for example, I'm going to pick 5 minutes here. When you pick 5 minutes, right? A lot of this stuff changes, right? See how drastically different the oscillator becomes? You've got to play with these numbers in order to get it to work for you. You've got to experiment. I can't do everything for you. So you got to experiment, see what works for you, back test it, and then to give it a shot. But I hope that clears it up for you. Shoot over to my blog if you get the opportunity. That's learnedinvestor.blogspot.com, and thanks a lot.